Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Monday, January the 30th, 2023. Wow, can you believe it? January is just like one day from being done. And it just goes faster from here. But in any case, here we are today. And usually when I make a call saying that we still need some additional upside and we have a shot at getting ourselves up to 12,600, the market will come in the next day and absolutely just destroy that particular count. Maybe not intentionally, but it always seems it's something, it'll drive it lower and then we recover. Now, what that has done though, is that I was considering a small four within the context that this was wave 5, not this sub-minuet wave 5, but a minute wave 5. So what I've done is that would have, it cut that out as soon as it broke below here. And I went much further than that. So I had to go back and take a look. And if you remember that when I was counting the internals of this particular wave, which got labeled wave 3, there was always this 4, so this would have been, this was here before, and this 4 was overlapping wave 1 before, but I was allowing it. Now I go back and I'm like, okay, well, this made it look like that's not part of this, so this makes this a complete wave. Let's move it all up. Now that's not changing my mind, it's not changing anything, it's just allowing the market to tell us actually what it has done and what its intent is now moving forward. So it clears up the count in that respect. It does not necessarily change the necessity or the thought process that we have one more leg up to do before the overall intermediate wave 2 is complete, or even this minor C wave, which we remain in. So let's just back out to the 4-hour chart real quick. We'll go over the basics of what we're doing so far, and then I'll get back into that, and then I'll re-add some fibs that'll continue to dictate where we are likely to end up. So first of all, you can see intermediate wave 1 complete. We're still working through the intermediate wave 2. We have additional upside still yet to do. We are in, there's minor A, minor B of intermediate 2. We're in that minor C wave, which will consist of 5 waves of minute degree, of which we have 1, 2, and 3 now. So I had to take one back. We're in the process of putting in that minute wave 4. Go back down to that hourly chart. So what we have inside there likely is an A, a B, and we're putting the C wave in. So let's look at the fibs that we have, and that's what I've got up here right now. Normal, we're looking for 382. Right now, we're honing in on 236. And that may be all we get. And quite frankly, it can work. We don't necessarily have to get down to 382. That's just the next fib level should it occur. But in its way will be the 200, the hourly 200 EMA, which sits at 11,841. So we stand a good chance of getting down to there. And that's why I've moved the 4 down. This is not indicative of where I think it's going to stop. I just put it there so it's lining up as the market comes down. I will move it to wherever that endpoint ends up. Now, once it's complete, and if this count holds in terms of we're still in that minor C wave and we still have one more wave to do, because I'm going to give you the alternate count now. So let's take note of 11,940. And then we have 11,846, 850. And then we have 11,715, I'm going to call it. Those are the fib and moving average levels that should be able to support and complete if this is a minute wave 4. Now I'm going to take those off and go back out to that 4-hour chart. Change this around, and we're going to put up our extensions again. And we're going to now mark there, to there, to there. So again, we got above this 12,222 pretty cleanly. We got up above 12,300 actually on Friday. So what do we have coming up next? In terms of just this larger fib level, the extensions, 12,623. I'm going to come back down. And I'm going to estimate. Now, let's just say that, for example, we do get down to 11,944. But I'm going to give it the benefit of the doubt, kind of go halfway between all of them and consider, let's call it right here, 11,910. So what do we now want to see what we have and what we can do in terms of a fifth wave? Well, again, it's using extensions, but I got to come all the way back down to the beginning phase of that third wave, going up to here, going up to here, and then bringing it down to here. We got quite the trip. But we have now 382, 618, we're up at 12,900. So it kind of changes the picture a little bit, because again, all day today in discussion, everyone's trying to roll around and think about what possibly could we get on Wednesday. And then to back it up, we have Apple, Amazon, and Google reporting on Thursday. We have Meta reporting on Wednesday after the Fed. We have AMD tomorrow. We have NVIDIA and AMET at the end of the month. So we still have enough earnings reports. And if they start showing up positive, in other words, if Apple, Amazon, and Google all kind of come in line or better and do some forward guidance that shows that we're really okay and we're looking forward versus what we think many are reporting. I don't think that's going to be the case, but let's just say, what are the possibilities the market could do? What are the possibilities of if the Fed decides, yeah, we really are just going to do 25 basis points? Now, that is not exactly what I am considering or what I am feeling. So if they should, or even if they do come in at 50, which would be more, still same as before, same as the end of last year, last December. So again, it's a coin toss. Actually, it's not a coin toss. I take that back. It's indecisive right now, and we're playing against narrative that's been out there for quite some time. We're playing against these turns that we're seeing, like in Tesla and in many of the tech stocks of this recovery, like we're all done and now we're just zipping straight up, which gives more credence to this being, unfortunately, my alternate count. Now, I'm still not prepared to move this primary degree A over. As I've said, this market can go all the way up to 13,007. I believe this is 40. So it has to go above 13,741 and not just tick above it. It has to really break above it before this goes over here and this comes over here, and we're getting stronger signals that it indeed still is an ABC, but this is going to be much stronger than we anticipated in terms of this C wave. So going back down to that hourly chart, the other choice that we had, and again, I'm going to take off our fibs that we have on here for right now. I'm going to leave this one on, which is showing us more for the C wave. And if I needed to, I could, again, bring this back down to here, bring this back down to here, bring this back down to here, and then count this as sub-minute wave 1 of minute wave 5. Now, if that's the case, we got a wave 2, which actually should still consider coming down into these levels. But if that's only wave 1, then we still got 2, and then a 3, 4, and a 5. So what are we looking at? Likely getting up into here. Remember, that one takes us above the level, almost above the level, doesn't it? Pretty sure it does. Almost. So we could start getting up to above 13,000 and still be an intermediate wave 2, or possibly pulling that over and it being a primary B wave. So that's still all out there. And it's not that we're being wishy-washy. It's not that, I'm saying anything other than these are the possibilities that are existing right now. So right now, I'm going to leave it like this. Just having a minute wave 5 without this big expansive minute wave 5 fits my picture, fits my thoughts on what's happening in the market, fits my thoughts about where the economy is sitting and how this narrative and what's actually happening don't necessarily mesh. Now, we will know a whole lot more on Wednesday at 2 p.m. Eastern. That is when the Fed makes their announcement. That, and then at 2:30 Eastern, we get the Fed chair stepping up to the mic and giving us his thoughts and giving us what the plan is and giving us what they all feel, et cetera, et cetera. Excuse me. So right now, we're postulating. Right now, we're not second guessing, but we're just giving both sides of this market. If the Fed shows up hawkish at this meeting, this market could just cook seriously down, because what they would be doing is not raising it by only 25 basis points, not raising it by 50 basis points, but going back to the original plan and raising it by 3/4 of the basis points, 75 basis points. And that would just absolutely destroy what we have going on. Now, take note that suddenly the dollar decided to perk its nose up today and get itself back above 102. Here I am thinking the dollar's really got to go below 100. And now it's going to perk up in advance of what obviously it is the market and Forex traders are believing may happen on Wednesday. Is there going to be demand for dollars because interest rates are going to be higher? Possibly. We got indications today, if you keep tabs on the real short end of the curve. Today I got 13-week and 26-week reports on what the auctions were. Both are closer to 5% than they are to 4%. So there's not been another downtick. In fact, they kind of just gapped a little bit today. And is that an advance of what's going to happen when the Fed makes their decision and lets us know what that is in 2 days? Very possibly. So when we're seeing it happen on one end of the curve, it starts to expand out. So right now the curves have tended to be inverted because people are trying to figure out, income treasury traders and interest rate traders are managing and trying to manage a portfolio of instruments that they may have to swing and adjust because they're trying to place, a 30-year bond. It's 30 years. So again, there's a lot of adjusting, there's a lot of thought, there's a lot of everything going on right now. And putting it all together and trying to come up with where we are becomes a little bit more difficult. So let's stick with the Elliott as I'm presenting it right today. I will give both sides. So I'm going to leave this 3 here. Consider that this could be a 4, realizing that we have the potential to come back down. And I'm going to go back out again. I'm going to get rid of that. And I'm going to put my other, just my retracements in. Nope, that didn't work. Sorry. Oh, come on. There. Thank you. I know we're going to put it there. And so we can see we got 11,943, 11,843, we're going to call it. It's 842, it's 843, and then 11,715. Now, that would be the levels for wave 4. Then we should start a wave 5. If we reach that tomorrow, then maybe on Wednesday we start to rally up. And then again, at 2 o'clock Eastern, we will have our answers. Now, downside activity, folks, remains the same. If this is going to turn into a disappointment, we're going to know, because it's not just going to, these were some strong downside moves. We had some strong selling right out of the gate this morning. Some very strong selling right out of the gate. In fact, it took most of the session for it to come back down and break those lows. So if the Fed doesn't do what the world and the US markets are expecting, and they come in higher and adjust higher, then people are going to be selling with a purpose. All of this hype, all of this recovery goes out the window. And we will start to break down. From an hourly chart, we'll break below the moving averages, and then we start to cut through support. And you can see, because of the rallies, our support levels, that's why we dropped quickly, because there's no support to be found here. We rallied strong and straight up. Where are you going to find your support points? They didn't exist, and this showed you. So we got all the way down to here before we stopped, and then got back up to it, and it held almost below it, and then traded back again. So our besides our fibs, our support starts to come in at 11,900. Then we got zippity-doo-dah. We got nothing really in there, except we got to come through, and we got to break through that. If we break through that, our next support level is 11,600. We break that, we've got 11,531. And I imagine I'll be drawing different fibs, because these would be for a fourth wave and not for a move down. But then if we're just working off of that, we have support there. Then our next support, again, because of the rallies, we do have some here, 643 and then 600. And then we drop quickly down to 400. And then we drop quickly down to 11,300. And then we black hole again, as I call it. We've got some down at 288. Then we drop to 11,100. Then we drop to 11,008 or 750, I'm going to call it. So because of the intensity of the rally, we don't have those price points that we can hang our hats on, that the market will come down and rest and maybe rally off of. So if that number comes out pretty severely, I think we start cutting right through all of this, and we immediately get away from 12,000, away from 11,900, and we probably drop very quickly and very hard, 200 or 300 points, and then kind of make adjustments as the next round is likely to come in. So my point being, if there are scheduled buy orders, they're going to be put through, but they will be annihilated. They'll almost be non-existent, because the sellers will just be like, yes, go, and they'll just take over. So again, this is what would lead us into feeling that this intermediate wave 2 is complete, and that an intermediate third wave is now underway, and it's kicking off in grand style. Benefit of, we've got a big suggestive move coming via the Fed decision. We're not looking at a CPI. We're not looking at a PPI. We're not looking at something else. We're talking to the big daddy right now, who's making the decisions of what happens at the top of my pecking order, which is interest rates. You move with those interest rates, it's going to flow straight down, and it's going to flow quickly. So bear that in mind as we get closer. But for right now and for tomorrow, I'm still looking, we got to probably come down a little bit more to complete this corrective phase, which I'm going to be labeling as minute wave 4. And then we have a minute 5 that should take us higher and above Friday's high at 12,311. And continue then to move. Actually, it's 12,308, but continue to move up into above 12,400, 500, and up towards those initial levels that we have at 12,634. Again, minute wave 5 will be 5 waves in and of its own, but possibly not as extended as we saw here. Maybe it'll just be a straight shot up, be done, and it's it. So, and we might get all of that prior to the Fed number. We may get most of that in tomorrow. Who knows? We have to wait. We got to see, and we'll trade. Over in the over in the S&P, it is basically the same deal. Again, here again, I moved the third, which gives us beautiful extended, but it takes care of that, which was such a big overlap here. I was allowing it because it was in a sub-minute level, but now I'm bringing it up, and it's still overlap, but not as strong. Now, even if I bring it down and I take it to the line chart, you can see it still was a nasty overlap. So it's all inside that third wave, as ugly as that third wave tended to be. So we can label it as we want. I mean, this is a 5. This was a dump. This was, all messy. But I can get it up there, and I can do a 4 and then a 5, put the 3 there. Now we got the A, the B, and we're working on the C wave. A little uptick there. And we got very small, but if I open this up, you're going to see it. 1, 2, 3, 4, 5. Is that all? Is that the C, or is that one of C? And we got some more. So let's throw some fibs up there and see what we got. I'm going to go back out and go to the candlestick chart. And just to begin, we want to put just our straight retracements on there. And we're going to go from there to there. So it's the same kind of a deal. Here we have, again, we have 40-40, which we did get below, and we actually closed below. We closed back, well, in all honesty, right there at 40-40, just a tick below it. So we have the 200 EMA, an hourly 200 at 40.22, and then we have additional support at 39.38. Now that number comes up pretty often in a lot of different calculations. It continues to roll around 39.38. So here we have it again. That would be 382. I think it probably comes in above 382, so maybe 40.21 or somewhere below that low, which was 40.29. So 22 is only $7 more, 7 SEP dollars. So once that's complete, there's the 4. I'll just put it into place. Right now, I'm kind of got it down to where maybe it can come to. And then we'll start on that 5th wave. So again, let's take this off. And now let's go back out to the 4-hour, put our first layer in. I think I left it on there. Yes, it's already still on there. So we have coming up 41.25, 42.04. And I'm bet you 10 to 1, we're going to start really continuing to see this 42.04 come into play. I'm going to go back down to that hourly chart, and I'm going to look at if I'm just going to put it in there, and they're going to be suggestions, because I'm going to mark it at the 40.20, 22 level, as if that's where wave 4. Oh, come on, guys. That's not what I'm looking. Put it there. There you go. And I call my computer anything, right? And then we put it there, and then I'm going to put it down there. 21, 22, it works. Okay, so what do we have going on? Look at that, 618, 618 and 618, where wave 5 would be 618 of wave 3, and where wave C would be 618 of wave A. So again, we're getting it, no matter where I put my count, it tends to continue to line up right there. Now, this also could work. Again, remember, it does not necessarily have to go above the high of wave A to be a complete ABC. That in and of itself, when I take it out, and we're just going to shift down and go to the line chart, then go back out to that 4-hour chart, take a look. It's not at 41.80, it's at 41.39. Well, we got 41.32 in there as being 382, where wave 5 would be 382 of wave 3. So boom, or 41.66. So that all works. 41.66 would bring it to a new high. above the close of that bar versus the extreme of that bar, which is 41.80. Now, 618 takes care of the whole problem. Puts us up at 4,200, takes care of that, puts in the new high, sets the stage for the next rally, decline, excuse me. Now, same deal with the S&P as with the NASDAQ. Should this be incorrect, and that ends up being wave 5, well, I move the 3 back down, here's the 4, and somehow this wave 5 did finish right there. It's going to be strange. I know I really don't like it, but if that's what happens and the market's going to let us know, because we turn from where we are and we just begin to fall through the moving averages, through the support, and again we have support right there at 40.22, but a break there shoves our support down to 39.64, right? Because we're already gone through 27. That would be our first line. We almost got to that today. In fact, I think we might have. We got to 29. There's 27, might as well, right? So then we have 22 where the 50 sits, which got close today. That breaks. We got nothing because of the rallies again. And then we got 39.61, 39.50, and then we break more. 39.12. 3,900 and a break there, ooh, sends us tumbling. We have 38.90, so pretty close to there. So that I would think that will be a zone, but that breaks here. We got this rally again. Now we're sitting down looking at 38.20. We go back out to the 4-hour chart. 38.20. Where is 38.20? Wow, we got all this rally. 38.20, and then we have 37.88, which is the low for wave B. A break there sends us to 37.50, then 3,700, 36.36, 35.90, and then all the way down to 35.02, which is the October low. And if it is going to be an intermediate third wave, I'm not saying it's going to do this on Wednesday, because that would be that would be a crash. That would be a crash. And if we start to crash at 2 o'clock in the afternoon, it's not going to be pretty. But I would anticipate we could continue the next day or two or whatever. But we would, if it drops into an intermediate third wave, you're going to be expecting it to break 3,500. That would just be the normal path for a third wave. It's going to break the low of wave 1 on its way to its own low. So, and again, once it were to begin, we're going to get all of that will be laid out to what the potential is, where I think it could go, and what we should be expecting. Right now, though, we got to finish this rally. We got to finish this upside move. So we've got our levels. And tomorrow, kind of looking for it to come down a little bit more and then start to rally if indeed we still have a minute fifth wave up to do to complete minor C and intermediate wave 2. Otherwise, we might be shifting it again, considering this complete, but only if the market produces the move that nullifies any further upside within this structure. Okay, so you get it. I'm not just going to come in on my own and go like, well, this is what's going on here. Boom, we're done. No, it's got to start breaking down. First of all, below 3,900. Don't forget the top of wave 1 is at 39.06. It's got to break below 39.06 and then keep going. And then get itself below these levels. And can it do that in one day? Yes. We have together, if you've all been following me and trading these markets, we have seen the S&P go 150 points in one day and even more. So it would not be unheard of for this thing to just lose momentum and crush. So again, that would be the ticket. That would be telling us it's all done. Stop looking for any more upside. We got every reason to get out of all of our long positions if you are, or to start building short positions if you haven't, or just be like me, a day trader, and you're going to start trading it from the short side. Okay. Excuse me. The moving averages continue to basically sit in the middle. They can turn around. The 8 and the 4 can flip and go right back up. The 20 is sitting right on the 50 right now, and this is on the ES hourly chart. It can sit right on it, starting to kind of flatten out. If this comes up, it will stop. If it continues to go down, it'll break, and that's going to add some pressure. Then we're starting to head for this. If the 4 and the 8 come down and break the 200, we're adding downside pressure. And that's going to start to lean us towards, well, we did have one more support down underneath here, but that would lead us into feeling that this was it. We're not going to go. We'll wait and see. Let the market tell us. I'm not going to try and tell the market what to do, because that is an exercise in futility. All right, I'm going to leave it right there. Our next update will be on Tuesday, January the 31st.